Hello, YouTube. We have an alert for new record highs, and the bulls are partying. As we know, there ain't no party like a bull party, and these bulls are just doing it, making a new all-time high. So what is the headline for today? It's that the Mag 7, even more cool now, right? Magnificent 7 was too long. We got the Mag 7 sending the NASDAQ 100 towards historic run markets wrap. Tech heavy gauge set for the best year since the dot-com bubble era. Keyword there being bubble and best year. We also know we got a 7-year treasury note auction today, which is giving us some mixed signals in the stock market. So we're going to come back and talk about this, but oh my goodness, was 1999 a good year? Prince had his song 1999. The market is happy. And as we know, there ain't no party like a bull party. So if we look here, sorry, Tesla's bringing the red, the Christmas. But if we look back at year to date for what is really driving those NASDAQ returns, what do we see? Well, it's the 40+% club. Apple, ironically, is the laggard out of the Mag 7. It's only up by 48. Otherwise, we got gains like 80% for Amazon. We got 233 for NVDA. We got 190 for Meta, 56 for Google, 54 for Microsoft. These stocks are big. They are sexy. They are majestic. They are powerful. Anyways, let's get on with the show. So why do I find that Treasury headline notable? I'll tell you. So U.S. Treasuries decline after a weak sale of 7-year note. To make this really simple, we're going to look at one chart. I don't want to overcomplicate this, but pay attention for a few minutes because I think this is really important. We've been talking a lot about this 10-year note and how there are a few key charts we have to be very mindful of. Number one is that we have this key downtrend here after we lose our 52-week high. Why does this matter? It matters because this is inversely correlated to the market. Look at the day that we topped out here. It's October 27th, so right around here. And what did it do? It went straight down. So when they say that the bonds are selling off or that there's a decline, it means that they're going lower. But what that really means is that we're going green. I know that might sound a little bit confusing, but bonds go down when they go green. And when bonds go green, stocks usually go red. So from that same time here, roughly late October, what did we do? We went up in a straight line. Why? The 10-year note is called the risk-free return. So when the yield on the 10-year note's going down, people find there is a better chance or opportunity for adding on some risk. So I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you very much ahead of time. You guys have been such a great support, and it's so nice to see the channel grow where we can help more people. So we're talking about a bubble, right? I don't really like that word. So let me see if I can bring it. I had a bubble here. I think I might have popped it. So let's see here. We got a bubble era. And let's see whether or not this is going to be a bubble that we're going to pop or prick, or if we're going to keep going higher. I'm going to come back and talk about this in a few more minutes, but let's just get the news out of the way so we can look at some charts here. So bubble era, right? I don't like that word. Here we're hearing about treasury yields declining after a weak 7-year note. And the reason why I find this interesting is because there's supposed to be $6 trillion in cash on the sidelines that will help the stock market. And what I find interesting is that people are talking about how that money is going to flow into treasuries or bonds, but we had a weak sale. So I'm a little bit confused about how people think we're going to get 6 rate cuts into next year, or that this line's going to keep going lower if people don't want to buy now, right? This should be a bargain if we're really going to get 6 cuts. This has me a little bit worried here. Not, again, cautious, not worried. Maybe that's a better word. So 1999 was quite a good year, and we're within about 1% of getting back to that all-time high. If the market can break through that record high in any significant way as we move through January, it's going to be very bullish on a technical basis. Let's see exactly what they're talking about. The rest doesn't really matter. There we go. They're all surging, right? Apple's the laggard. Oh, my God. NASDAQ 100 price to projected profit. Okay, cool. 24.9. Is that rich or is it cheap? Well, that's up to you to decide. There's a lot of information in here. Kathy gave a 30-minute interview on Bloomberg today, but let's make the story really, really simple. So if we now have a look here to our monthly chart, we hear, I'm going to go through a couple of charts really fast just because I think this is going to be important. So when we look here to our 10-year note, where are we? We are right on support. Why is this important? Well, because I said that exact same thing when we were over here on the S&P, when we were right on support. And what I said is that it might not feel like we're on support because the move down has been so violent. And I think that that's what's happening here. Power slam right to support, and now we're dead cat bouncing. It looks like it's even trying to curl up here. Is it going to do it? I'm not sure, but we're seeing some warning signs. If we're able to suck this back up here and reclaim 4.2, that would mean that we're likely pricing out some of those rate cuts. If this chart goes up, remember, it means stocks are likely going to go down. So if we're looking for some kind of sell-off into the early part of the year, this is likely what's going to cause it. Remember, they're talking here about if the market can break through that key area into January, we're looking for much higher highs. The challenge here is going to be whether or not we actually break out from our seasonality chart, which shows us here that we go up, kind of flag out into the last few days, and then we go up a little bit more, and then we go down. So if we do this part right here with January, where we go up a little bit more, it's about 1%, just under 1% from 2 to 0. So what would that mean? Well, it would mean that we're going to go to a new all-time high on the S&P 500. And the reason why this matters is because the pattern I am tracking really depends on whether or not we're going to keep seeing these higher lows and higher highs. So we're going back to November of 2020. There should be no surprise. We got November 2020. We got our higher lows closing over the candle high. We're likely going to hold on to this. If this pattern holds, we are right here. So we're looking at this box, and we're about right here right now. What does that mean? There's potentially months of continued upside. And we've been focusing on this 1 month right here, or this red one. Why? Well, because this is November, December, January. November, December, January. So what would this imply? It would imply a monthly higher high. If we get a monthly higher high, we're basically going to be in new all-time highs. So if we get that monthly higher high and then we fall back down, that would be a higher low and a higher high. And then we can go and see what happens in February. Another higher high, another higher low. And then if we fade, we'll be looking for that into March, and then we would be rallying after that. So I really want to see what the $6 trillion does when the last calendar day of the year hits. And more importantly, what happens going into the first few days of the year. The reason I say that is because there's likely a lot of window dressing happening right now for stocks, which means that they're making something appear deceptively attractive or favorable. Why? Because the market had a record run going back to the 1990s, 1999 to be precise. And the S&P is up like a cool 25%. These guys better pretend that they've been partying and buying stocks. Otherwise, why are they managing your money? What are they going to be looking to buy? Well, the Mag 7, right? And everything that's been working, not the red blocks, everything that's green. But then into next year, that is where people can reset and they can shift their focus. If we look here to the last 1 month, we can see that some of the blocks are now shifting. Microsoft's a little bit red. Google's a little bit less green. Berkshire a little bit red. People are buying a lot of other stuff like health technology, Amazon, Home Depot, Tesla, MasterCard, Chevron. They're rotating. This is good because we're seeing that widening out. Part of the issue here is that we're currently in extreme greed. And yes, extreme greed is not for buying fresh, but if we're managing the risk and we're forming higher lows and higher highs, it's okay to set to buy if you're setting some really tight stops. So what the story really comes down to is this one here. It's a 12-month chart. So if we have a look here, let's actually go to a 1-month chart. We're going to go first to SMH because SMH is going to be our semiconductors. And semiconductors, so chips lead tech, tech lead SPY. So chips lead tech, tech lead SPY, and this is what we're looking for here if the S&P is going to go to new highs. This has been the recipe that I've been looking for. So if we're going to get a record gain going into the end of the year, and then we're going to get more next year, well, we're probably going to get a move like this, where we claim the previous all-time high. So chips went first, then we got XLK. Actually, XLK went first. Did it? Let me double check. No, I think SMH went first, then XLK followed. XLK is going to be the mega caps, the big two. That's going to be Microsoft and Apple, more weighted. So what do we know? Previous all-time high, double tap it, come down, and then we move higher. Basically forming a cup with a handle and then advancing. If we now look over here to the S&P, we see that exact same pattern forming. We got the cup, we got the handle, and the question is whether or not we're already doing our handle, or if we're now going to do that same thing where we now back test and then we claim this all-time high. What would that do? It would give everybody what they want. It would give the seasonality chart a move higher, a move lower, a move higher, and another move lower. Again, higher highs, higher lows. It would also mean that the bears are going to get a chance to lick their wounds, and then we're going to find out whether or not we're going to go higher into the rest of the year. So without overcomplicating the story, that is it. If you're looking here to a 12-month chart for the S&P 500, what this really comes down to is whether or not this is going to act as a pivot for us to go up or a pivot for us to go down. If it's a pivot for us to go up, we want to be over 480 as soon as possible, ideally tomorrow. Why? because as we open up this new candle and the one on the monthly, we want to be over that area. Again, we're looking for a massive squeeze if we get there. Otherwise, it could be a big fat suck. If we look to 2022, what happened? We went up by 98 cents higher, got a failed breakout, and then we got a bear market. So all the warning signs were there. I really encourage you to watch the weekend video now queued up here on the left-hand side if you want more details. If not, I look forward to seeing you on the stream tomorrow. Thank you again so much for your support.